Hey everyone, it's Eric Reimer. What a week it's been in the markets. We started off on Black Monday with the largest point drop the Dow ever experienced in history, about 2,000 points. We saw a huge 1,000 point rebound right after, and a lot of volatility culminating in Black Thursday, which saw the Dow break a new record in just the same week. And then, of course, concluding Friday with the largest point gain the Dow has ever experienced at nearly almost 2,000 points again, almost peeling back Thursday's losses. It's really been a turbulent week, primarily still from coronavirus, even though oil's having a start off the week and still having a general effect on the market, especially in terms of banks, lending, etc. However, coronavirus, as we saw with the volatility shifts, is still definitely the primary driver right now behind the markets can now a bear market as well. We've officially reached that. And on Friday, I thought that the initial gain we saw in futures overnight was going to be a very soft rally, as it did turn out to be by midday. We saw the Dow's almost 1,000 point futures rally starting off the day, peel back to just barely a few points at all. However, once the 3 p.m. First at 2 p.m., the Speaker of the House made an announcement concerning some provisions that the Congress would be attempting to pass to address coronavirus. However, at 3 p.m., the President made a speech where he outlined what many thought was clearly a serious attempt to really address coronavirus and the current uncertainty and fear facing it. And so new measures were announced for fiscal stimulus, for repealing tax burden for the moment to increase spending and purchasing power by consumers. New items were announced for increasing testing. And all of this clearly was what exactly the market was hoping for, but perhaps not expecting, given the huge rally that took place immediately afterwards. We saw the Dow gain about 10%, which is simply unprecedented besides in a extremely nervous and shaky market. I think that, however, things aren't settled yet. I think that there's still a lot of risks out there. The main risk right now, I think, still comes from coronavirus, with oil and travel and border restrictions, trade, etc., having an effect too. However, I think it's still unclear exactly how coronavirus is going to be handled going into the spring and perhaps even summer. It's unclear if in the US we're going to experience a similar wave of quarantines like China, Italy, and other countries are increasingly starting to experience. We see that coronavirus is now still accelerating in the United States, and that's definitely going to hang over the market. I could easily imagine on Monday the Dow opening down 1,000 points and experiencing another really rough day, because clearly this disease is very impactful on people and therefore very impactful on consumer behavior, economic activity, business transactions, and everything, cultural life, social life in general. We see now this past week one of the things really driving coronavirus market fear has been the wave of cancellations of seemingly previously unimaginable items such as sports, tournaments, school classes, everything. And that clearly, I think, was what was driving the markets shake up a lot this week. And I think it's going to continue for a little while. I think that many investors would benefit from averaging in. And so it's hard to predict when the bottom is because we simply do not know exactly when coronavirus is going to be fully handled, contained, and on a track to be managed and wiped out. And even after that, there still might be a little market post reaction and whatnot. And so I think that even though the week is ending off on a extremely good note to a very otherwise rough week, on a very hopeful note, not only for the market, but for health and society in general. But I think this is not the end of the story, and I think there's still going to be a lot more to come. And so, happy trading out there, and remember, don't don't over leverage yourself.